wins, small losses. Beyond the excitement, beyond the intensity, beyond the intellectual challenge of trading lies risk management. My name is Ash Plaisted, trading psychology master coach and active trader for the past 25 years. Thank you for joining me from wherever you are in the world, and a very warm welcome to a new episode of the Trading Psychology and Mindset Show. I'm coming to you from my base here in Southeast Australia, and as always, I'll be diving deep into what is needed to retrain the mind we bring to trading into the mind we need for profitable and sustainable trading success. Now, to many would-be traders and even more experienced traders, risk management is the boring, the tedious part of trading. It involves identifying, assessing, and prioritizing risks, then developing strategies to mitigate or eliminate them. And many traders go to the trouble of and effort of learning and developing excellent forecasting and methodology competencies. That's very normal. Yet they ignore at their own peril the importance of fully understanding and implementing good risk management. Now, what is good risk management? We'll get into that in this episode, but let's start by looking at where good risk management applies, and it really applies across all areas of a trader's life, including appropriate risk-reward strategies, the acquisition of solid trading-specific mental fitness skills, and establishing what I would call a bulletproof level of self-confidence. So what I want to detail today is 4 ways that a well thought out risk management plan can help you succeed at trading. So let's start. Number 1. Now, one of the most important reasons for practicing risk management in trading is to protect your capital. Now, this was said to me early on in my trading career. I've continued to hold this as one of my most important principles, and it's a very important principle for you to take on, and that is the protection of capital, or you might want to say in layman's terms, staying alive long enough in the game of trading. It's not about suddenly making money overnight. Often when you're setting out to become a sustainably profitable trader, it's about staying alive long enough to figure things out and to learn about yourself. And in order to do that, you must protect your capital, because we know trading involves the potential for significant losses. And without a proper risk management plan, a trader can easily find themselves in a financial hole that is very difficult to escape from, a blown-up account or even multiple blown-up accounts. So by carefully managing your risk, you can avoid making rash decisions that can potentially wipe out your trading account. So rule number 1, protect your capital, stay alive long enough, and risk management planning is essential in that. Now, number 2, in addition to protecting your capital, risk management can also help you maximize your profits. Now, that might seem obvious, and perhaps it is, but as with a lot of things in trading and in life, the answers are often the obvious ones. So by carefully analyzing the risks associated with a trade, you can determine the optimum level of exposure to take on, ensuring that you're not taking on too much risk for the potential reward. Now, this can help you maximize your returns and reach your financial goals. Now, I just want to touch on financial goals while we're on this subject, and I've spoken about this many times in the past. Trading is not about the pursuit of financial goals, yet you've got to have some sort of financial goals, because we don't get into trading to lose money. We get into trading to make money. Therefore, it is logical to have a broad financial goal. And this also is important to working out your logical area of risk reward to get to your goal over time. Yet, of course, the key to successful trading is then to switch focus to performance in the moment. I've spoken about that many times. So maximizing your returns. Now, this is about how many units of profit you make compared to how many units of loss you make on any given trade. So over a series of trades, your units of profit should always outweigh your units of loss. Now, this depends on whether you've got a 2-to-1, a 3-to-1, a 4-to-1, a 5-to-1, even up to a 10 to 20 to 1 risk reward plan. We can talk about that in more detail in another episode, but essentially that's the key to managing returns, and risk management is the key step in that. Now, number 3, risk management is also important, very important, for maintaining your emotional well-being as a trader. I think this one gets ignored too often, and people treat risk management as purely perfunctory, purely procedural. And yes, of course it is. And it can have that tag of boring or tedious. And particularly if you're a person who tends to be bigger picture and enjoys the process of trading, it can almost be something that doesn't get the attention it needs. Now, from the emotional side, as with anything in life, the more confidence we have in something, the better we will be at it, and the more we'll be able to stick to our plan when the going gets tough. Now, trading particularly can be very stressful and emotional, and without proper risk management, it can be so easy to make impulsive decisions, those fight, flight, impulsive decisions that can lead to even more stress and more anxiety, and that is the death knell. So by having a clear risk management plan in place, you can make more calculated and rational decisions, which can help reduce your stress levels and improve your overall trading experience. So as with anything in life, confidence and calmness comes from knowing you've done the work and knowing you've prepared, whether it's exercise or business or trading. So risk management's a key part of that preparation to give you confidence so you can work through the stress and emotional ups and downs of trading. And number 4, and I touched on this before, from a mathematical point of view, good risk management allows the law of large numbers to play out in your favor. Now, if you haven't heard this term before, I'll explain it a little. Perhaps you have heard this before. Essentially, it means that you only need a small edge to exist in your trading system for it to be profitable in the long term. Now, the long term I would define as at least the next 20 trades. But, really what we're talking about is the next 20, the next 30, the next 100, the next 1,000 upcoming trades. This is a very important mindset shift that you're using mathematics, the law of large numbers, in your favor. This is what casinos figured out many decades ago about human nature and mathematics, is that if they keep people playing long enough, even though people will win from time to time, over the long haul, eventually the casino will extract all of their money, because the law of large numbers means that will happen. Now, in trading, it simply means that if you have a system that is profitable, let's say 50% of the time, you just keep trading through a series of losses, knowing that your system will even out in the long run. This is super important, because I see so many traders really struggle at an emotional and psychological level when they get put to the test. This is like the walking across the hot coals part of trading, that you've got a great system, you've got a great theory, and then you go and you have 2, 3, 4 losses in a row. So how many of you can then stick to your system on the 5th trade or the 6th trade or the 7th trade when the previous 6 have all been losses? Well, the key here is to know that you've back tested your system and that it works over a period of time. And simply all that's happened is you've had a series of losses. That's just a statistical anomaly. You will then at some point probably have half a dozen winners in a row. But this is a very important aspect of trading, to know that over large numbers, large series of trades, your system with an edge will extract more capital from the market than it gives back. Very, very important. Now, from a confidence perspective, I guess this is where I'm coming from with this, right? This provides enormous confidence to stick with it for a trader who may be in the midst of several losing trades in a row. Now, this is of critical importance when developing a trading peak performance state of mind. This is a very, very important piece of that puzzle. Now, there are many different risk management strategies that traders can use. Now, there's a few that we can name here. This is setting stop loss orders, using position sizing techniques, diversifying the markets that you look at trading, using the law of large numbers, having a risk reward strategy that means you don't have to win all that often to make money. That's the part of trading that people that don't trade don't get. They think that you're gambling, but what you're really doing is saying to them, if I have a trading system that when I'm right, I make 3 times the amount that I lose when I'm wrong, that means, let's say over 10 trades with 5 winners and 5 losers, you're making 5 times 3 units of profit, which is 15, less 5 times 1 unit of loss, which is 5. So you're making a net 10 units of profit, whatever that unit of profit happens to be to you. It doesn't really matter. What matters is the total number of units of profit less the total number of units of loss over a decent series of trades where you've executed your system flawlessly. Okay, I hope that is really, really clear. So that's the 4 key things to look at when developing a risk management plan and how to use it to improve your trading and your mental fitness towards trading. Now, in summary, good risk management is a critical aspect of trading that cannot be overlooked. It helps protect capital, maximize your profits, and maintain your emotional well-being. So by incorporating good risk management into your trading plan, you can and will increase your chances of success and obviously of achieving your financial goals. Now, let's see if we have any questions from you guys today. Now, just looking in the chat, I see a question from Louise. Louise is in Sydney. Hi, Louise. Let's have a look at your question. How do I balance the opposite extremes of intensity of trading with the mundane part of risk management? Right. These are almost the 2 diametrically opposite parts of human nature, which is the intensity of excitement, the thrill, versus the mundane, tedious, boring, meticulous part of risk management. So it's a really good question, Louise. It's simple yet profound, and one with which I have observed myself personally, many traders struggle with, and to be honest, I struggled with myself early on quite a lot. So this comes down to the mental fitness and understanding how to separate your trading from your excitement. And this is one of the key mental shifts that I would suggest you work on, Louise, and it's part of what I do with my coaching with my clients and the courses that I provide, is to learn how to treat trading as procedural and method-based, not enjoyment or excitement or impulse-based. Therefore, trading isn't something you treat as exciting or intense or a thrill ride. That's the bit that needs to be removed from trading so that you don't have that opposite extremes of intensity with trading. And therefore, looking at risk management, it may still be mundane, but it's not too far apart from the act of trading either, Louise. So this really comes down to a deeper level of self-reflection and awareness and self-development to understand what do you need to do to find enjoyment in trading, but without it being about excitement and a thrill and intensity. Now, there are some traders, particularly, high intensity day traders who can make that work, but it's very, very difficult, and that's very, very rare. Okay. The vast majority of successful long-term traders have made the switch from trading for enjoyment or a thrill or excitement to trading as a profession where they're just going about their business, and risk management is just part of that business. So I hope that helps, Louise. Go over to my website and check out my courses if you want to undertake some direct training on how to develop that peak performance state of mind. Okay, folks, that's how you build the mind to manage the psychology of trading and where risk management fits in. And that's the level of mental fitness that you need to pursue. So if you need any other form of help from me, you know there's a few ways I can help you. Check out my 5 Shifts to Trading Mastery Masterclass. That's on my website, mindsetfitmethod.com. You can book a deep dive one-on-one discovery chat with me via a DM on LinkedIn or booking into my diary. And of course, all of these episodes are available either on my YouTube channel or on any good podcasting service. You can go out and check it out and listen to this over and over and over again so that the learning becomes entrenched in your thinking. Now, wherever you may be in the world, I thank you for joining me, and I wish you a week of mindful and successful trading ahead. I'll see you at the same time, same day next week for another episode of the Trading Psychology and Mindset Show.